Well, a good morning to you, traders. Welcome to the Flow Show. Back from the holiday, and I half wish I wasn't looking at what's been going on in markets the last week or so. Yeah, I've been hiding under sunbeds all last week, seeing what's going on. Hope you've been okay. Morning, K-Man. How's it going?
Hi, morning, Ryan. Welcome back. I hope you were on your sunbed and not hiding under your sunbed in those markets. But yeah, I hope you had a nice time off and coming back to stabilize the markets a bit.
Yeah, not sure about that, but yeah, I'm sort of half glad I've missed it all because I don't know what would have happened if I had been here. But there you go. I had a nice break, nice and refreshed, so I can get stuck into it now, and we'll hopefully keep some of this volatility that's in play at the moment. Right, let's get stuck into it. Get started on all the details. Get rid of my ugly mug first. We're going to start off in China. Let me just stick it on there for while we're waiting. Hardly unexpected, really, but the stock exchanges have set daily restrictions on net share sales by individual hedge funds and big retail investors, trying to take some of that volatility out of the markets going on. We've had a bit of data out from China, and no real surprise, some of these numbers. Trade balance ballooning to 736, under 737 billion there, as you can see. Exports up a whopping 12.4%. Dollar denominated trade balance also beating expectations. This is all still in front running. We've seen a lot of this from the trade data. So expect things like this, though, to improve things, numbers like GDP and whatnot, when we get those sorts of data dropping. It is potentially going to paint a bit of a false picture if you start seeing GDP numbers in certain big export countries going higher, because it's likely to all fall off a cliff once all the front running, getting goods in before tariff restrictions and the like starts happening. So as much as it looks good, we should expect some of these numbers to go into sharp reversal unless there's a bit of a tariff relief coming. But anyway, China posting some good numbers as much as we can believe them. We've also had a story out this morning that the PBOC has allocated fresh quotas for gold imports for banks. This is something they do now and again, tell banks how much gold they can buy or not. We don't know the full details of this story at the moment. I think we can probably assume that any quotas that have changed are likely to mean higher quotas, i.e. they can keep buying more, given that they're still big buyers of gold on at the moment. But there's always a risk that the quotas have perhaps been reduced, which would obviously be a negative for gold. So until we get the full details of that, we'll have to wait and see. Trump's been speaking to Shiba last week. According to Japanese sources, he was speaking about FX and Japan's FX policy, saying that they had a strong interest in Japan's FX policy. Finance Minister Kato was out saying that US and Japan share the view that excessive FX volatility is undesirable. And he says that FX issues will be dealt with between him and Treasury Secretary Bessent. So no real concrete news about that, and what exactly the thoughts are, but there's ongoing conversations going on. Japanese and US trade representatives will be meeting on the 17th of April, so this week, for tariff talks. There's a growing list of people who are talking to the US, given everything that's happened last week. Bank of Japan's Ueda says US tariffs are increasing economic uncertainty. That's pretty much a standard line from every central bank at the moment. Says US tariffs are expected to exert downward pressure on the global and Japanese economies. Says uncertainty over tariff measures have risen sharply. He reaffirms there's no preconception over the direction of their monetary policy. The impact on Japan's economy hinges on upcoming US tariff developments. The BOJ is to make appropriate policy decisions aimed at the 2% inflation target. Now, Kay, I just want to bring you in because just while you were away, we were seemingly edging closer towards a hike, either this month or potentially May. Has everyone been shaken now and, everyone's going to stay in pause mode waiting to see what's going to happen? Or is the BOJ still going to stick to what's happening with inflation?
That's a good question because I've been kind of reflecting on that last week as well over a couple of shows. It's again now, I think, all up in the air. They're meeting on the 1st of May. By then, they should kind of know what at least Besant's stance is towards FX. We know that Trump and Besant has actually already been talking about it. We know that they would want a stronger yen. We know that also the Japanese would not be averse to a bit stronger yen. So it could be that what I thought that they may do is wait for the new fiscal year to start and then hike, that they may still be on that bandwagon. It'll all depend because there's always this outright possibility that knowing that Japan has always been not on a real naughty list, but on a bit of a watch list, let's say, at the Treasury, there is still a chance that they say, well, the market decides upon the levels. We are not going to get involved right now, and we have explained to the Treasury, as they did already so many times. We have explained this stance to the Treasury, and well, so be it. And then all of a sudden, we see the yen weaken 5% on the back of it. But and then perhaps the chances for a BOJ hike are even higher if they keep that stance. The wage negotiations have gone the right way. Data are still a bit up and down, but relatively supportive for another hike. So I would still lean towards them hiking on the 1st of May, unless we get really bad news on the tariffs front, that negotiations don't go well, that but they may be spun out for quite long. But there is also this chance that the negotiations don't go well and that Trump effectively slaps tariffs on all things Japanese, which would then be a big break to whatever they are planning or want to do with the interest rates. But I think in where we are now, I would still lean at them very possibly hiking on the 1st of May.
Yeah, thanks, mate. Good advice as always. Right, moving on to the EU Muppets. EU's Dombrovskis estimates that the EU could suffer a GDP loss of 0.2 to 0.6% because of these US tariffs. EU Trade Secretary or Chief Šefčovič is going to meet US officials today in Washington. Spain's economic minister is going to meet the Treasury Secretary tomorrow. So, as I mentioned, there's lots of people using up their air miles again, going and getting conversations going. ECB's Lagarde says the ECB is monitoring and ready to use instruments it has to procure price stability. Says if she was aware of any Fed intervention in support of treasuries, I would not tell you. There's obviously been a lot of talk going on about some of these market moves and will central banks have to step in to provide liquidity or calm things down or whatever. So that's along those lines. The ECB are meeting this Thursday. So that's going to be something worth watching, irrespective of what's expected for rates, which are expected to be cut by 25 pips at this meeting. And prior to last week, before I went away, it was looking pretty much a 50-50 that they might, whether they were going to pause or they were going to cut. Goldies see an additional 25 pip cut coming in September now. They say the terminal rate will be dropping to 1.5%. by the end of 2025 versus their prior call of 1.75%. Now, I wanted a bit of help catching up on this, Kay, because as I say, before I went away, we were looking pretty much on the fence as to whether they would pause or cut. A lot of the market getting a bit bearish on the Eurozone. But given that everyone expects inflation to pick up if tariffs kick in, or now that tariffs have kicked in, cutting rates would add to that, wouldn't it?
Yes, and there's been so many moving parts when you were out as well. I mean, slapping tariffs on the EU, pharma, whatever, and then scrambling back. And where we are now, looking at those yields, we may be in doubt, but I still think that they will cut. This is still my side of where I expect the ECB to be, just because they have not. Most of the ECB speakers have touched on it, but they have not yet said this is an inflation event which is going to hold us back from cutting. And as a matter of fact, even somebody like Ren is on board for cutting this week. So I would still err on the side of them doing another 25 BPs, and then go into firm wait and see mode for what is going to happen on all things tariffs, growth. But I think they may still do that 25 just to show the markets and show Europe that they are willing to support the economy from their side as well.
Yeah, I'm a bit in the middle. I think there's a case for pausing to see whether the dust is going to settle. They are doing victory laps still about inflation getting back to target. So, I don't know. They probably will cut. I think there's probably a chance that they may go on pause. What I do know is I've got low conviction on anything that they do at the moment. Just as the nature of central banks, none of them know what's going on with all this tariff stuff. They're all in the same boat of uncertainty. Right, anyway, moving on, just a quick flashback to last week's data on Friday. We had PPI out of the US following the drops in CPI that we saw last week. PPI pretty much going the same way as well, with some drops there, although one of the measures, the ex-food, energy and trade, actually went up a pip. I did notice that core CPI last week under 3% for the first time, I think exactly 3 years and 11 months, if I'm not mistaken, maybe even the 4-year mark. So the first time CPI has dropped, but it's not expected to stay there, according to one of the Fed heads, which I'll move on shortly. Michigan consumer sentiment still dropping. Preliminary numbers for April coming out on Friday, and another big whack up in those inflation expectations that apparently don't matter to most people in the market. But when your inflation jump into a whopping 6.7%. So we'll have to wait and see when this soft data starts filtering through into the hard data, if it does, because you ain't seen nothing yet if that happens. But otherwise, the rest of the numbers all looking pretty crappy for those Michigan data there. Fed's cash and carry says it's hard to get a reading on what's actually happening underneath. We're talking about what's going on in the economy underneath all this news and mess going on. It says there may be credibility to the story of investor preferences shifting. It says with tariffs, inflation will be going up in the short term, and our job is to ensure it doesn't turn to long-term inflation. It says tariffs put Fed in a tough position in pushing up inflation and slowing growth. Says I think the Fed or the Treasury stepping in to markets should only be done reluctantly. Fed's Collins is one of those expecting inflation to get back on an upward trend. Says would expect inflation well over 3% this year due to tariffs. However, sees a mixed bag on longer run inflation expectations. The Fed is absolutely ready to help stabilise markets if needed. Fed's Mausoleum says financial conditions have tightened, and if that's sustained for a few months, it would affect economic activity. Fed's Williams economy is beset by very high levels of uncertainty. Says soft data has weakened a lot, but the hard data has held up so far. We've got the Bank of Canada this week as well, Wednesday, and these two meetings, BOC and ECB, are going to be important to get perhaps that first reaction after all this tariff news of last week, a bit of insight into how central banks are going to play these latest headlines, if you like. The BOC, they did do part of their cutting over the last few months has been in anticipation of possible economic effects from tariffs. So now we're going to be finding out, are they going to look to do more now we've had some news, or will they indeed go on pause? It's again another 50-51, but perhaps more 60-40 in favour of a pause for this. The market is certainly expecting a pause. Economists expect the rate to be held at 2.75, according to 18 of 29 of those economists. 11 think that a cut will be coming of 25 pips. So give or take, that's roughly the same 60-40 number. The Bank of Canada apparently will cut rates by a further 50 basis points by the third quarter, say just over half of those economists polled. Kay, you got any thoughts on the BOC coming up, or even the ECB? We've talked about the ECB, so the BOC.
I think the having cut in anticipation is the important bit for this week. So I am expecting the Bank of Canada to stay put because the situation is still pretty fluid. Obviously, there has been a lot of back and forth regarding tariffs, regarding which sector is going to be impacted the most. Canadians have already said that they would also be ready to support different sectors. So for this one, I would go. My feeling is that it's going to be a hold this time, and then see what happens next on the tariff front and on the maybe even GDP and things like that coming out. Although the Canadian data, unfortunately, they are showing a lot of times a quite delayed number. So we need to go into the lookout for recent data to really start judging. But I think it's them in turn. I think that's what I think, at least they will be on hold.
Yeah, I think that's probably right as well. Right, let's get into all the tariff crap and what's been going on. Lots of, excuse me, to in and fro in. Tariffs are not reciprocal anymore. They're now national security stuff on chips, and there's going to be new ones and changing around, and semiconductors and all that rubbish. Anyway, just going over the broad strokes. On Friday, a Fox reporter said that talks over the first deals over tariffs are weeks away, according to people familiar with what's going on behind the scenes. Trump himself then was out saying we are doing really well on our tariff policy. It's very exciting for America, and the world is moving along quickly. We'll see what quick means in those terms. Reports saying that Trump will announce a tariff rate for semiconductors over the next week. Other reports say Trump is waiting for China's Xi to give him a call, but apparently the Chinese see things differently. White House Press Secretary Leavitt says more than 15 trade offers are already on the table. Trump hopes deals will be made before the 90-day pause ends. The UK has done a bit of tariff moving. They've suspended tariffs on 89 foreign products. That's apparently to help cut costs for businesses. US Treasury Representative Greer says the US is shifting from reciprocal to national security tariffs, and there's no plans yet for Trump to speak with Xi. And just to give you an idea of the impact tariffs are having, Sony is hiking its PS5 prices in Europe by 25% ahead of a likely US tariff hike. So if you're looking to get the old gaming system, you better be quick before that price goes up. That's roughly all I've got from the headline front. Kane, unless you got anything else, obviously I'm just getting back into the swing of things.
No, that's fine, right? I think we could we could fill up an hour just with headlines every day, but I think let's stick to the more important ones and then see what's just happening in this market, really. Because the situation is still so fluid that, I mean, any headline that we talk about one day can be completely reversed the other. We had a lot of fake news which became reality, and then it was brushed under the carpet again. We just have to be very mindful of just the situation being extremely fluid. And but I think for this week, when we look at movers, and we know that well, everything is on the move, but the yen especially has been quite volatile. So this is one that I would really want our audience to pay attention to. That is those talks, because FX has been mentioned. And for us FX traders, obviously, that's the most important thing when FX comes onto the table, especially between two big blocks who are already, who are also their main, or some of their main trade partners, investment partners as well, because we know that Japan is the biggest holder of foreign instruments. So it's going to be extremely important what's going to happen and come out of those negotiations in regards to all things yen going forward here.
Yeah, absolutely. It's going to be very important, those talks as well. And what happens if they get a deal done? Do we see relief in the dollar side of things, or do we see relief on the yen side of things?
I think I think there is going to be, and I'm going to stick my neck out a bit here. Everybody expects something to come out of it, but obviously the dollar is weak on versus, well, nearly everything. I think if they get to find a deal, people will want to sell dollar yen hard, and then I think, but it's not. I can't see MOF and the U.S. Treasury come to an agreement where they kind of sell dollar yen together and put it like 10% lower. I don't think that the Japanese are really ready to go into such a big intervention plan. Of course, I may be wrong, but if it is as expected, and they say like, okay, I mean, we are okay with a stronger yen, but again, the market will decide. The market is probably going to put dollar yen 5, 6, 7 big figures lower, but then I see a big setback coming, and if that's the case, because that's going to be market driven, not probably fundamentals driven. But again, I mean, I may be wrong, but the thing is still that also, and we have to go back to what we were saying before, that a resolution of tariff uncertainty would already be versus Japan from the US side would already be somewhere positive yen, and then the Bank of Japan would still be hiking rates. So I think overall, the sell the rallies dollar yen will still be there, but I would caution against a first wave move. If we see anything like they both agree that it's okay for the yen to strengthen, but there is no real intervention, I think then we may see first of all a dump, because that's what the market does, and then in a second wave, before we start selling the rallies again, a big recovery as well coming.
Yeah, I think it's got to be, any headlines have got to be defined as to whether they're general risk headlines or country specific headlines. Because if Trump says, okay, I'm delaying all tariffs for 180 days, then you're probably going to see a bit of risk on, and that means probably a bit of yen selling going on. So yeah, you need to know, if you get a headline, whether it's just Japan related or risk globally related. before you make a decision on that. But I know we're at an interesting level down here at this 142, bit of an old level that we've been down before. No surprise to see we're finding support into that again, but I'm not as up on my charts and my moves just yet. What I do want to flag quickly is just the stuff we've got coming up this week. Now, just in case you weren't aware, it's going to be a shortened week. It's a double shortened week because we've got Easter weekend coming up. So a lot of markets are going to be shut Friday, and then particularly in the UK and others. The following Monday is a bank holiday too. So it's a long 4-day weekend for some of us here. So expect things to be a bit quiet over that weekend. There won't be a flow show Friday or Monday the 21st. So just note that in your diary. Looking at you, Bran. As for the rest, we do have a ton of data coming up this week. UK is a bit of a busy one. We've got jobs report tomorrow, and then PPI on Wednesday for what that data's worth at the moment, given the mess at the ONS. We also get some French CPI numbers as well. I think those are going to be final numbers. Canadian CPI as well coming out a day before the BOC might just get the markets changing around those last minute expectations. And then we start getting the new manufacturing data for the month via the Empire State data on Tuesday or tomorrow. So keep an eye out for that. More data out of China Tuesday as well. And we do get GDP. So as I said, keep an eye on those numbers. Potentially could see some green numbers, but as I said, there might be a bit of a false picture being painted there. Eurozone CPI coming out again, final numbers for that ahead of the ECB. Bank of Canada, as mentioned, we are getting a statement and a monetary policy report. Now, this was something Macklem touched on at the last meeting about these forecasts that don't expect any clarity from them. They could be very wide ranging, these forecasts of what they expect the economy in amongst all this tariff stuff going on. Get a bit of CPI data from New Zealand and Aussie jobs data as well on Wednesday. Thursday, really about the ECB. We get a bit of housing data from the US, the next smaller survey, manufacturing from the Philly Fed, and obviously what's been going on in jobless claims, and then Japan CPI, which obviously follows the Tokyo CPI numbers, which come out first. Anything on there tickle your fancy, Kate?
Well, we have spoken about a couple of them already. Jobless claims. The market is always trying to find a reason for it to be extremely interesting. Maybe one day they will start to show up those government cuts or other stuff where people are now getting very worried about those tariffs. I do think that at one stage the unemployment data will start to show up some of the effect, but then is it already so expected that the first round will be having an impact, but then it will fizzle out quickly? I don't really know, but those job numbers have they are not coming off yet, but now we are in the thick of the tariff, so they may start to show things like job uncertainty.
Yeah, absolutely. And then on Sunday, we have China's LPR rate announcement. They are still expected to potentially cut rates. There's been a few state research pieces and whatnot coming out over the weekend and whatnot, saying that rate cuts are still potentially on the table. They were expected to do some cuts in the first quarter, but they stayed their hand. Obviously, things going on, so we're not sure yet what they're going to do with that, but that might be a first indication, that LPR rate decision on Sunday, as to whether they're going to embark on a little round of rate cutting.
Yeah, the Chinese officials have hinted at a moderately loose monetary policy, and we also see the PBOC gradually raising the fixing rate. So let's call it like Powell always says, every meeting is live. So I think there as well in China.
Yeah, exactly. Right, that's that. One thing I just want to show you quickly, just so you can keep an eye, and I'm going to highlight our platform here. Just if you're on our platform, you can have a look at the volatility measures, which are obviously much elevated at the moment, as you can see from these three beauties here. Oh, I don't know where cable's gone. What's happening there? Anyway, euro dollar, and I look at these 1 month numbers: 11.32%. Dollar yen, around about 15% at the moment. I can tell you what cable is on another screen: 10.26%. So this is going to tell you how volatile things are over the coming days. If these numbers start dropping back, then you're going to see obviously this volatility that we've got at the moment pulling back as well. But we're still running at pretty high levels. If you look at that, you can see where they were from a week ago. So we're still running pretty hot. I expect this volatility to stay in place for a few sessions to come yet. So just keep a note of that, that we could get some hard and fast jumpy moves. This isn't a market for 20 pip, 10 pip stops at the moment, okay? So adjust your trading accordingly. I'm sure K-Man's given you plenty of advice on that over the last week. Kay, I'm going to ping it over to you for a quick chart look, because I'm still not in. I'm still playing catch up a bit.
No problem. Sure thing. If you'd give me the hand, or I can take it. Oh, okay. Here we go. Right. Let's just run over the major salary to start the week. Euro dollar. We've tried. Okay, we've tried a few times now to break above this. First of all, this trend line, then the magic 115. We've been highlighting this level for a while, so we are getting into the zone, rejecting it. Remains to be seen now with the fluidity in this market surrounding tariffs, any headlines on the trade front, where or if this can at some point go through. I would say it is a big level. I'm not chasing it up here, but then in the shorter term, we have to also acknowledged what's happened in the 112.20 zone. This is the one that I've always said, like it is a bit of a zone here. Obviously the prior high around here, but we saw these setbacks in the last week, especially on Friday. We saw setback back into this zone and we bounced from it. So we have a relatively defined zone, I would say, to start the week, which is on the downside 112.2070, and on the top side, give and take 114 and a half, 115. So that's interesting to be monitoring there. Just give me a quick sec. I am nursing a bit of a cold, so I had to sneeze there quickly. Cable is an interesting one because, as we know from the euro sterling, that it's been a bit of a laggard compared to what was happening in the euro. But starting the week here, we see euro sterling seemingly having found a bit of resistance there as well, in the zone that I was kind of expecting it to be. And now sterling is actually catching up on all things euro, and we are getting back close to that 3rd of April high here around 132 figure 10. Now here as well, I've highlighted this zone a few times in the past. 130 10, 130 30, 130 40. It's like your 112 20 70 on the euro dollar. This is your cable, but bear in mind that cable is a bit can be an accelerated euro as well, and will be trading up and down in risk. but we have seen those setbacks also Friday. We've come into that zone and we bounced pretty rapidly. Now, what are we looking at topside? Assuming that at some stage this 132.10-ish would give way, we are seeing a pretty interesting zone here. Before we can talk about that a return to 134.5, the highs that we saw in September, we are going to need to overcome the 132.70, 133, the figure, okay? And you can compare it to what's happening in euro dollar around 114.5, 115. This is your zone on the cable. It's also already a fib level, but it is also the a quite longer term trend line. I don't specifically like trend lines when we only had two points of contact, but it coinciding with that fib level or with the prior high here as well. I think it is important enough to keep an eye on. Okay, 133. This is going to be your gateway to higher levels. Okay, either you get there, you test, you fail, then we are going to range trade probably. All of this above this important zone, but if it goes through, we could be trading at the much higher levels. I still don't particularly like the dollar, but I would say at the start of this week, bearing in mind what we've seen, the prices that we hit last week, the uncertainty surrounding what is going to be the next Truth Social post, or the what's going to happen with and I would then say, especially as we were talking about this Japan US thing, but also obviously the China US relationship, where Xi is not seemingly the one who is going to pick up the phone first. So there's a bit of arm wrestling going on there. I would say that for the time being, the dollar globally should still stay on the relatively weaker side of things. Now, Ali was asking about the Canadian dollar, and I've spoken about this morning on the in our chat room as well, and I was planning to show this. I haven't been trading much of it of late, just trying some quick scalps here and there, but we have broken below this trend line, which was also the 61.8 of the last run up. Around 139.40, 50. Important enough. Friday we crashed through it without even looking back. But I would argue that we are entering a zone of support. And it is a trend line coming down from prior levels. It's also, I will need to adjust it a little bit. I just quickly dropped it on there this morning. We are also entering a support area trend line wise here at around 137.5, 137.60, 40, even depending on where you put your little levels here on this support. And we're also entering some fib levels support, and all of that is happening between where we printed the low this morning and 137.15.20. So I would say the next 100 pips here in dollar CAD are going to be quite important in my opinion. Break 137.40, 30, and confirm through 137.10. Dollar CAD is probably going to be on its way back down to 134. But looking at this level, looking at things not going in a straight line forever. We've seen all those moves. They can last for very long, but then you do see setbacks. I would expect the next 100 points in dollar CAD to start to show up. Okay, but to reverse or to get back even a bit more positive, we are going to need to get back above 139.5. Okay, for as long as we are below 139.5, we could actually start to see this kind of move develop, like we have seen those moves in the past. But I am paying very close attention to this these next 100 pips in dollar CAD, which in my opinion are a support zone. All right, so now what else are you guys looking at? You're looking to go long on the Aussie. I've been looking at the difference between those two here on the Aussie and the Kiwi, and I must say that I'm obviously the dollar has been sold off. Commodity currencies are coming back. Copper is rallying again. There's enough reasons, and I've been saying that last week a number of times. I thought that Aussie and Kiwi were putting in fakey breakies and that we would rally higher again. We have done it, but between the two of them, I still am not overly impressed with what the Aussie is doing. So we still will need to break 64 figure 15, in my opinion, to continue higher. For as long as that doesn't happen, there is a fair chance that we are going to test it, but we are failing again here. So everything will depend, obviously, how it goes on trade. Again, we will endlessly be repeating this because this is the environment we are trading in. But for as long as we don't break above 64 figure 15, I think there is a chance that we fail again. Where the Kiwi is much more, much stronger actually, in my view. Okay, we are at an important level here, 58.85, 59 the figure. It is a relatively important level at 59.30 even, before we can talk about 60. But if you see the recovery of the Kiwi compared to the recovery on the Aussie, I find it much more interesting actually on the Kiwi, because it looks to me like it may move a bit faster still than the Aussie. Some things have to do with liquidity, okay? I mean, the Kiwi is a smaller market. When we talk about currency pairs, you have to know as well what kind of market you're in and what the liquidity is in certain markets. Kiwi um, is a much smaller market than the other major currencies, so it can go faster than the Aussie as well, and we have seen that in the past too. That may be the explanation of this move as well, but in the meantime, it looks much more positive, especially after we've seen that fake breakdown on the back of the RBNZ rate cuts last week, and I cautioned against this move as well. I said if we get back above well, 56 was your first in indication, but if we get back above 57, we can run through, and this is what happened. So for me, the Kiwi right now is a bit more interesting than what's happening in both the Aussie and the Kiwi. Then okay. Dollar yen, we need to look at it, and then I think it's going to be close to time for wrapping up for today. We've seen those bounces getting capped around that red trend line that we broken last week. 144, 140 at 144 and a half, because it's a level that we've been trading before. 144, 144 and a half. I think we're still going to find rally sellers, but there are equally interesting zones here. Yeah, 141 3/4 has showed up quite a few times in the past. It is also a support level already on its own. And then as the week progresses, if we still continue to see this dollar yen trade lower, we will have to see and look very, very closely what's going to happen. I think around this 138 3/4, if ever we get there. Obviously, the past low, if we break through there, we're going to do that 100 pips. That's just the dollar yen, how it trades. But in the meantime, respect those little levels in between, 41.70, 75, 40 and a half. But this to me is going to be extremely important for when we get out of the negotiations with between the US and Japan. If ever we break through 138 and a half, 138 3/4, we could actually drop significantly further. But then again, what I've been saying earlier as well. We could see this kind of very, very fast move develop and then see a bounce. This is actually what I think that would happen is we're going to see perhaps a drop through closer to 135 or so, but then in a flash we may be back up above 140 actually. And this is a little bit how I look at how moves could be developing over the next couple of weeks, like big drop and then a recovery, and then we start again and we think again about what the next stop or what the next play will be. Right. There are, we can look at 100 instruments, but let's leave a bit for the rest of the week, shall we? Ryan, I'm
Yeah.
giving it back over to you. I think maybe you have your page up, ForexAnalytix page up, to remind our audience about the great discounts that we are doing.
Yeah, there we go. Just to let you know, we have got a massive 40% discount on for our monthly subscriptions. If you want to take advantage of that, obviously, with markets as volatile as they are, you need to be in a community that can guide you through what is happening. I mean, you get this, what we're doing here on the Flow Show and on Face is just a little snippet of what goes on every day, all day in our chat rooms. So if you are getting a bit lost with markets and what's going on with the news and everything else, then take advantage of that discount. Come and join us on the platform and in our chat room. And it's like having the Flow Show on every day, pretty much 12 hours a day, if not more. So grab that discount while you can. It's not going to be around for too long. As for that, thank you very much. Have a great day. Have a great week. And we'll catch you later. And otherwise, we'll catch you tomorrow on the show. Thanks, Kay. And have a good one, everyone.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.